You said that December is the new June.
That's right. The most important question is inflation stabilizing, and is it over time sustainably coming down? And we do believe that that is the case.
The acceptable level of the Fed goal will be something like 3?
3 is not acceptable. 2 is acceptable. 2 is the target, and 2 is the target, period.
Generally, what's your outlook on China this year?
I think what we've seen in the last few months is very promising indicators of stabilization and a recovery.
In terms of the painful, very painful property cycle, where are we now?
I think there's not a bottom for China as a whole, but it is encouraging to see that it does seem like there's been some real stabilization in the Tier 1 cities.
Do you think the patience of our authorities will be paid off this time?
Patience will be rewarded. It will be difficult for the next few years.
欢迎收看《顶级投资人去现场》。本期节目去到的现场是5月下旬在上海举行的摩根大通第20届全球中国峰会。本届峰会汇聚了来自全球33个国家和地区1300家企业的超过2500名参会者。摩根大通全球中国峰会是中国规模最大、最具影响力的商业领袖年度会议之一。在峰会现场，顶级投资人节目专访了 PIMCO 品号的总裁及信贷研究部的全球主管 Stracke。PIMCO 1971年成立于美国加州，是全球最大的主动型固定收益产品投资人。截至今年3月底，旗下管理的资产规模近1.9万亿美元。Stracke 常驻伦敦，目前负责 PIMCO 除美国以外的所有业务。在采访中 ，Stracke 表示，中国经济包括楼市已经出现了企稳复苏的迹象，尤其是最近的楼市政策不仅有短期效果，长期效应会更加明显。Thank you, Christian.
Thank you.
Now, all eyes on the Fed. So, what do you expect the move from the Fed this year?
Well, we do expect that the Fed will, on balance, probably be able to cut rates, but not until late this year.
So you said that December is the new June.
That's right. And one of our colleagues said December is the new June. It'll happen by December. We focus, of course, on the headline of, is it going to be September? Is it going to be June? Is it going to be December? The most important question is inflation stabilizing? And is it over time sustainably coming down? And we do believe that that is the case, that certainly there have been some disappointments on the inflation front at the end of last year and the beginning of this year. We did get a supportive, constructive inflation print last week about April. That was better than expected. And if you listen to Ben Bernanke, who is the chair of PIMCO's Global Advisory Board, he'll say, no matter what, a 5.25, 5.5% policy rate in the United States is restrictive and will cool the economy in time such that inflation will sustainably come down towards the Fed's goal. Maybe the Fed cuts this year, hopefully it cuts this year, but we see the direction of travel. The direction of travel is inflation stabilizing, coming down slowly, and eventually the Fed being able to follow with rate cuts.
Fed goal is 2%. The acceptable level of the Fed goal will be something like 3?
Well, if you talk to Rich Clarida, so Rich Clarida, former vice chair of the Fed and is now a colleague of ours at PIMCO, he's our chief economic advisor, Rich Clarida would say 3 is not acceptable. No. Yeah, that 2 is acceptable. 2 is the target, and 2 is the target, period. Okay. We don't think it's likely that the Fed would declare victory at 3%.
Okay.
Yeah, 3% is too high, and we need to get inflation down from there.
Let's talk something about China. Generally, what's your outlook on China this year?
Yeah, I mean, if you go back 2 months ago, the global consensus, maybe outside of China, but the global consensus outside of China was that, the Chinese economy is very weak. I think what we've seen in the last few months is very promising indicators of stabilization and a recovery. If you look at the PMIs in China, they've been above 50 for the last few months to show that sentiment is recovering and activity is recovering. There have been targeted but important policy steps towards helping the recovery along. It's not what we call the bazooka. It's not a massive policy move to drive stimulus. but the targeted measures seem to be working to help turn things around. We think that the 5% target of GDP this year in China is reasonable. Maybe it'll come in a little below 5%, 4.5% or so, but that would be a strong positive upside surprise relative to global consensus just a couple of months ago.
Besides that, what are your concerns on Chinese economy currently, right now?
Well, the property market remains quite depressed, but the Chinese authorities are realistic about how you can turn the property market around. And this is very common in economic cycles in economies all over the world, that you get booms and busts in property markets.
How long will it take?
Oh, it'll take 3 to 5 years. It'll take 3 to 5 years for there to be a healthy clearing of the property markets, where there begins to be new construction, new activity, property prices rebounding considerably. And that's a very globally standard time frame of 3 to 5 years of very low construction and an absorption of the excess supply that is out there that happens over time. And then it resets at a healthy level and picks back up.
In terms of the painful, very painful property cycle, where are we now?
Well, we are hopefully at the bottom.
Hit the bottom.
Hopefully at the bottom. And in our trip here in China this week, we've heard a number of comments from some of our colleagues and some of our clients that there are some indicators that things seem to be starting to bottom out, particularly in the tier 1 cities where activity is starting to come back. Whether we're at the bottom or not in the tier 2, tier 3 type of cities remains unclear, but the recovery will start in the tier 1 cities, and as that starts and as it solidifies, it'll ultimately spread into the tier 2 and the tier 3 cities. So I think there's not a bottom for China as a whole. You have to focus on the different regions, but it is encouraging to see that it does seem like there's been some real stabilization in the tier 1 cities. And ultimately that should spread to the rest of the country, but it'll take time.
Last Friday, our government has launched a series of policies to support the property market, to resolve the unsold property things.
Yeah.
And will they help?
Well, I think they'll help in the short and in the long term. So in the short term, they'll help at the margin. It's not a massive stimulus. It's a targeted stimulus to the most important, in our view, the most important part of the measures is to actually outright buy properties and turn them into social housing. Now that we think is the more important thing over the long term, is that if there's a broadening and a deepening of the social housing sector, and that provides more of a resilient social safety net for those people who need it, and that really helps to address some of the concerns. Why are savings rates so high in China and consumption so low in China? It's because of fears about what could come and whether there's a social safety net to support if there is economic volatility. But so broadening the social housing system helps to address that confidence question, which should have long-term implications. In the short term, it will help to stabilize things.
You mentioned some bazooka things. Our authorities seem very, very patient. So do you think the patience will be paid off this time?
The patience will be paid off, yes. We're in the middle of a natural response to that overinvestment. There's a decline in investment. There will be some healthy conversion of private property into social housing, very healthy in the short and the long term. There was too much activity in the property sector, and so allowing a natural, healthy rebalancing of the economy away from property investment into broader, more diversified investment, as the government is targeting right now in terms of things like the old equipment manufacturing, stimulus for retiring old manufacturing equipment into new manufacturing equipment. That is a broadening and diversifying of the economy in a healthy way. So yeah, that patience will be rewarded. It will be difficult for the next few years. But ultimately, to go back to the imbalances that prevailed for 10 years or so before the property bust is not really in anyone's interest, long term.
What is the right combination of the fiscal and the monetary policy in China to answer the challenges now?
Well, I would reframe your question a bit to say, what is the right combination of monetary, fiscal, and structural reform?
Yes.
Yeah, right. and I think there is a very healthy awareness in China from what we've seen that structural reform has got to be the third leg of the stool. That monetary policy has to be appropriate for the risks out there, the inflationary risks, but also the downside risks to economy. And so, you have to thread that needle with monetary policy. Monetary policy has to play the most important. I think that's probably a lesson from China's response in 2009, 2010 to the global financial crisis, that there was a monetary response, but there was also the bazooka fiscal response, which then led to overinvestment in a lot of things, including in property. And so
a lot of hangover.
A lot of hangover. For a healthy next 3 to 5 years, it's got to include structural reform across all sorts of areas of liberalization of goods and products, liberalization of labor markets, liberalization, not just liberalization, but adjusting things like education, and then also addressing all sorts of micro structural reforms as well. So, that's a big project, and for any economy, for any political system, these things are quite difficult. But you see time and time again, you need to have structural reform alongside monetary and fiscal policy response.